Hello everyone and welcome to a new episode of Bitcoin, Fiat and Rock and Roll. My name is Michael Blaschke and today we have the perfect guest to cover a super relevant topic for all of us, money creation and stablecoins. This is because our today's guest, Jón Helgi Egilsson, is a former central banker who later co-founded Monerium and created one of the first and most successful Euro stablecoins. Jón served as chair of the supervisory board of the Icelandic Central Bank. He witnessed the financial crisis in 2008 firsthand, along with its dramatic impact on his home country. This motivated him to think deeply about our financial system and later apply existing e-money regulation to stablecoins. The result is Monerium's Euro E, one of the first and most successful Euro stablecoins. Well, you might think, why the topic money creation and why stablecoins and why now? Well, an interesting Forbes article this month captured my attention. It's titled Rethinking Money Creation as Private Credit Tokenization Surges. This article's core argument is as follows. Non-bank private credit and tokenization are surging. On the other hand, traditional bank lending is declining. Those two effects could change or reshape how money is created in our economy. Well, and this article made our today's guest indispensable because Jón is the very author of this Forbes article. And Jón also suggests embracing these changes in money creation rather than resisting them. Jón also advocates for updating centuries-old ideas about money creation, which, by the way, after having read Lynn Alden's Broken Money, is totally in line with my thinking. So, with Jón, we have an absolutely unique individual today as our guest. It's a former central banker gone stablecoin. He created a successful stablecoin. Welcome to Bitcoin, Fiat and Rock and Roll, Jón Helgi Egilsson.
Welcome, Jón, to our podcast.
Thank you for having me.
Yeah, and it was my idea. I think I proposed to Michael to have you, Jón, because I'm a personal fan of Monerium and how easy you guys make it to bridge money from our fiat system to your stablecoin. And we briefly discussed, would it be a great idea to have an English-speaking guest here in our podcast, which is usually German-speaking? But Michael and the other co-hosts, they gladly said yes and said, okay, this is a very interesting idea to get Jón on here. And I would like to kick it off with you, maybe introducing your personal side, maybe your educational side, because I saw in your Vita that you are a guy with mathematics in background, engineering in background, and economics. Quite a unique combination. So please give us a little flashback on your educational history, where you're coming from.
Yeah, thank you. I was educated as an engineer. I worked in the software business for many, many years. And actually, when I was working in, trying to export software to other countries out of Iceland, I was always, pondering, why is the central bank doing what they're doing? Why are they always increasing interest rates and making the currency get stronger? So when I was exporting the product, I got, less and less for my product. And I didn't understand this. And then I went to the central bank and said, guys, I don't think this is working. I don't think so. And after, many discussions, just before the collapse, actually, in Iceland in 2008, the senior economist at the central bank said to me, well, Jón, you're just an engineer. So, if what you're saying is true, then you have to prove it. So then I decided to enroll into a PhD in economics. And so I have a PhD degree in economics as well. So this is my background educationally, but I'm Icelandic, born and raised in Iceland, educated in Iceland, Denmark, in the US. I've lived in US, in Hamburg, in San Francisco, in New York for 10 years. Yes, I'm an ex-banker. I was in all kinds of roles there. I used to be a assistant professor at the university. visiting scholar at Columbia University, and so on. So, this is briefly my part. And maybe just to add to this, and because of what happened in Iceland, I was really interested to take a look at this new technology that was underlying Bitcoin. In 2013, I really dived into it. It was actually a friend of mine that suggested that, I should accept payments in Bitcoin. And I said, well, Bitcoin what? And so then I thought, this technology could really, really change the way that the monetary system is working.
Jón, we should add that you were really successful in your PhD. I figured that your research is the most read in the Journal of Applied Economics, and your IEEE cover article was featured in the Best Writing on Mathematics 2017. So your transition from engineer to economist is pretty successful. Good. Well done.
Well, thank you. If you like something, if you have a passion for it, then you try to do. And it's easy, so to say.
Before we dive too fast into the stablecoin thing, I think it's very important to understand your personal motivation. So when we talked in the preparation call about your vita, you said, okay, when the financial crisis was happening, you were actually watching from New York. Maybe take us back in time. What was going on in your head when you saw the systems breaking with the heavy impact on Iceland, your home country?
Yeah, actually. So what happened is that I did some research 22 years ago as an engineer, and I did that with an economic professor. And I was just trying to understand this, whole idea about, monetary policy and what was happening in Iceland. And we came up with a report basically saying that this is not sustainable. And if the central bank, will continue to do what they're doing, then we might see a collapse in Iceland. And that was in 2001. And we suspected that there would be a kind of collapse in 2001. And actually, there was a mini crisis in 2001, in March 2001. And then we said, okay, so please, hopefully we have learned the lesson here. But then the whole thing started over again. And until the financial crisis of 2008, they basically, in my mind, repeated the same mistakes as they had done before 2001. And basically, the whole problem of all of this is based on the fact that, every person is forced to basically keep their money in or the digital money in a bank account. And this is not safeguarding the money, it's basically lending the money to the bank. And that is problematic. Because in the end of the day, you just want to have your money somewhere in a safe place, and you don't want to be at risk, even if the bank goes bankrupt, right? You don't want to do that. So, and this, in Iceland, after the collapse of 2008, we had international disputes with the UK, with the European Union, with the Dutch government, and so on. And because, the banks collapsed, a lot of savers, they lost money, or they at least didn't have access to their money. And then the UK government, the Dutch government basically said, well, dear friends in Iceland, you have to pay. The taxpayers have to pay for the failed private banks. And I thought, no way. This is not the responsibility of a taxpayer. These are private banks. There is no law, basically saying that the government has to pay this. So we basically fought this. We said, and we basically fought in a way that there was a referendum rejecting the government's proposal to basically take on a loan for almost 20 years to repay this, basically to basically pass the debt for future generations to pay. We said no. And then the European Union and the Dutch government and the UK government came back and said, okay, so you reject it. But what about if we lower the interest rates and, allow you to pay, for, extend the payment period? And I said, oh, come on, this is the same principle. We should not pay. But then, a lot of people in Iceland were just tired of this and they just want to move on and said, no, we should maybe pay. So we fought another campaign and we had another referendum, and that referendum turned out the same way. It was rejected. But before it was rejected, the EU and the Dutch government and the UK government said to us, if you will say no, then we will sue you. We will take you to court. And we promise you that you will be much, much worse off than if you would just accept the favorable terms that we are going to offer you now. And I said, okay, great. Please do so. I mean, we would really like to know, is it really the responsibility of a taxpayer to pay for failed banks? And we had, and there was actually one university teacher at the time that said, and he was a minister as well, and he said, we have to pay. If we won't pay, then we will just become the Cuba of the North. It would be over, basically, game over, Cuba of the North. But we actually won this court case, and on January 30th in 2013, we won. And the EU, the UK government, and the Netherlands, Dutch government, they lost. And we celebrated like, it was like we had won a football match or something. It was so, people were so happy. And every year since, we celebrate what we call the Cuba Libre Day. So, so we propose a toast and say to the Cuba Libre Day. So this is the background. And when Ethereum, first of all, when Bitcoin was launched and we saw this technology, which solved a very important technical problem, the double spending problem. And but when Ethereum launched, we understood that a lot of assets could be tokenized and put on chain. We could also take regular fiat money and represent them as tokens on blockchains. And that would change the whole game, because then people would not be forced to have their money in a bank. They could have their money on a blockchain, and they could transact peer-to-peer and so on. But the issue at the time when we started was, okay, so if this is fiat money on chain as a token, how should we, do we have to think about regulation and license? And as a central banker, I, and my colleagues, we said, yes, we obviously there are laws in Europe basically saying that you have to be licensed. If you issue a representation or digital version of cash, then that's defined by European law as e-money, and anyone that is issuing e-money has to be licensed as an e-money institution. So basically, we decided to get the license, build the system, and the system had to then support the license. And we became the first company to be licensed and authorized to issue fiat on chain. That was in 2019, long before MiCA. MiCA came into effect in June 30th, 2 months ago. And MiCA is basically saying, that you have to be an e-money institution in order to issue fiat on chain.
Take us a bit back into this year 2018, 2019, when you applied for this electronic money license. Because at the time, I was around at the time, and everybody was wishing for new regulation which takes blockchain into account. But when I hear you talking, it seems quite simple that even the old regulation was somehow feasible for you to get that license. So how was that? Was that very complicated? Did you need to educate the regulator that you are a bit different, or how easy or complicated was that at the time?
Well, it was actually challenging. We can say it's easy, many years later, but it was very challenging. Just simple things. We started a company, okay, and we wanted to build the system to make sure that it would be compliant to the existing law. And as a company, you need a bank account, right? So we went to a bank and said, okay, so we have a company and we would like to open a bank account, please. And then the bank said, so what do you do? We are a startup company and we're working with the blockchain technology. But that's the same as Bitcoin, right? Yeah, Bitcoin is also using that same technology. I'm sorry, that's not possible. We are not willing to open up a bank account for you. So, this simple thing, like opening a bank account in order to pay salaries to our staff, was problematic when we started. So there were many, many challenges. And then we were the first company to get the license. So we approached the regulator, and we actually approached more than one regulator in more than one jurisdiction, because we didn't know if it would be accepted. Okay, we were just hedging our bet. And it took a long time, and hundreds of pages and case studies and explanations and so on. And that's understandable because no one had done it before. Okay, and in the end of the day, the Icelandic supervisory authority, they were really willing to understand the whole thing. They worked with the regulators in the UK and other European countries. And then in the end of the day, they said, they understood that this is e-money. Yes. There is a different technology. Yes. It's peer-to-peer. Yes. What does that involve? Well, it involves that you have to make certain provisions, shall we say, in order to basically comply. And we showed them how we did that, how the system was supporting that, and all of that. And then it took a long time to get the license. But in the end of the day, we got it. But then we had to go and say to we had to fund the company. And then we said to the VCs, okay, so we believe that you will need the regulated, licensed, fiat on chain. And then the VCs, many of them said, really? Now, come on. This is the new world, right? Cryptocurrency, they're going to rule this. You're just old. You're just old-fashioned. So we were not fit for the VC environment either, because they thought, no, you don't need any regulation. So until, many, many years later, then everyone is, of course you need a regulation. So there were many challenges. Yes, that's true. And then, having lived in the US, then it's interesting to experience, the European VC environment. It's totally different. And this is also represented in the Mario Draghi's report recently. The VC environment in Europe is lagging behind, shall we say. And there's I sometimes wondered, why is it that European VCs are not willing to basically take outsized, big opportunity and bet on it? Yes, it's risky, but there is a correlation between risk and reward. And if you want to make something big, then yes, you have to take some risks. And that is not the mentality maybe that we met in Europe. And just as an example, we have now big stablecoin companies, globally. In Europe, we have Monerium, of course. We have Circle as well. But if you just compare the amounts that have been used to fund those companies, funding of Circle has been 100 times more, because there is this reluctance in Europe basically to go for it. Europe has regulation, and they're very good at that. And the US, they have no regulation on a federal level for stablecoins. But the US, they have the unicorns. Europe has not the unicorns in this area. So yes, Europe is good in regulation, maybe, but there's something missing.
Cool. So I think let's go to the present and let's talk a bit about your product. So we mentioned your company is called Monerium. It's a EURE stablecoin. Let's tell us a bit about your product and the features of your stablecoin.
Yeah. So we're just a regular euro, digital version of the euro, but we are a token. Okay, and licensed as such. This is the same regulation as is used, as for example the European Central Bank. The European Central Bank accepts euros in this format as e-money, and we offer them on different networks. Until this morning, we supported Ethereum, Polygon, and Gnosis. Now, after lunch, we announced that we are also supporting Noble, which basically is opening up the space to the Cosmos system, where you have I believe you have about 40 networks that you are then we are supporting. So that would mean that we are now supporting 43 networks. We are going in aggressively into other networks as well. So that is the token and the blockchain networks that we support. And then one of the first lessons that we learned was that it's not, you cannot expect regular people to download the wallet, know what the public address is, what is a private key. Yeah, it's no problem. Private key, don't worry. You don't do that. So basically what we did was said, okay, this is the underlying technology, but most companies and most people are just familiar with the bank account. And anyway, you also need to interact with the banking system. You want to use Aave or Swap or whatever, but you also need to send money, back and forth between the banking systems. So what we did during COVID and introduced it a little more than a year ago is that we said, okay, so basically we as a financial institution, we just issue IBANs to our customers. You onboard our customers, you get your Monerium IBAN, and that IBAN is quite unique. It basically works in both worlds. It works in the old system, and it works in the new Web3 ecosystem. So all the money that goes into this IBAN is automatically minted into your smart contract or address, and then you can just do whatever you want to do in the Web3 world. And if you need to basically pay your rent to someone from that has a bank account, you just send the token basically to the bank account, and it happens in a few seconds. So it's and we're fully integrated into SEPA, the European payment system, which makes it so easy to use the euro. And we see this in the numbers as well. So if you look at the volume, the volume of the EURI on chain, we have about 50%, half of the market share of the volume, and Circle is the next biggest. I think is about 35 or something like that, 35%. So that is basically explaining this. So these two features are really important. It's fully legal, of course. It's just the euro. It's supported on many chains. You can, of course, go between chains easily using our solution. You don't need to rely on bridging mechanism between the networks themselves, because we are in control of this. And then it's fully integrated into the 11 trillion euro bank deposit market. So we bridge those two worlds. I think that is the most important features of our system. And then maybe I should mention that, we are small team relatively, and we have always emphasized to arm the builders. So we are focusing on making sure that the APIs are really, addressing your needs as a developer, whether you want to build treasury solutions or wallets or whatever. It is easy to basically build on us, and you can use our solution within your solutions. The onboarding process goes through Monerium in the end. Of course, the money laundering process is conducted by Monerium. We take care of all those things, so the developers can just focus on building.
So, John, if I understand you correctly, what's unique about Euro E is threefold. First, it's a digital version of the euro, so Euro stablecoin that works on multiple blockchains. Second, it's backed by real euros held in regulated banks, and you only provide IBANs to users. And third, it can be used for both small everyday payments, but also for large business transactions, in that you approach two user groups, if you will.
Exactly. Well said.
Okay, and your main features are that your transfers are fast, often within seconds, It works across different countries in Europe, and it can be used 24/7, unlike traditional banks, which is great. And fees are substantially lower. Would you add any main features beyond my list?
Now, these are the core functionality. And then what is happening is that we see all these, great platforms that are being built on this. Imagine, for example, so our vision was that we want to offer people choice. So you don't need to rely on the banking system. Okay. What does that entail? Well, you have to have the real euro. You have to be able to store it or keep it, by yourself. You can do that on a blockchain. But then you have to be able to use it in every day. You want to buy coffee or you want to shop groceries or whatever. So now, what is happening now is that we have then, like Gnosis Pay is basically using the Save wallet. So you basically connect the Gnosis Pay card, the Visa card, to the Save wallet, self-custodial wallet. And then you basically go and buy your coffee or buy your milk in the supermarket. And then it goes through it. And it's all powered by Monerium, So you really don't need a bank for this anymore. Then if you add to it the fact that now the euro is becoming more and more available for lending and borrowing and so on, it's going to change the whole picture. So this is gradually happening. Yeah.
And what are your most important users right now? Kind of a distribution between retail, commercial, and institutional?
Well, actually, so there are a few institutional platforms that are servicing, like cards, like banks, actually, in the back office and so on. These are, volumes that are going through. There are treasury solutions that are basically happening either this week or next week for corporates. But when you say who is most important, then I think we are early in this market, and there are builders that are individuals. They are our users. They know how it works, and it is very important for us to basically make sure that they understand how it works, because they are in the end going to build those platforms. So I think, our user base, individual user base is, it consists of, a lot of developers that are just, using this now for their own, instead of a bank. But they then can basically move on and extend and expand this usage in their platforms.
And how do you project that user adoption in the future? So what is your hope and what do you think is going to happen?
Well, I'm really bad in projecting anything. I'm going to give you two examples. First, when I was introduced to Bitcoin in 2013, I was traveling in the north and it was a very remote place, and I drove my Jeep to the north. And my friend that is now with Monerium, he said to me, I was recently appointed to the central bank, and he said to me, Jón, I really want to pay, reimburse you for the gasoline because you were driving north. I said, sure, okay, no problem. And then he paid 1/3 of the gas that I spent on this trip, 1/3. And he sent me 6 Bitcoins at the time. Imagine that. And what did I do? You're talking about projecting something. When that Bitcoin had doubled, I said, that's great. I'm going to sell it. That was the worst ever investment decision that I've taken in my life. And, I probably could buy 10 cars or something with that amount now. So I'm not really necessarily good. I'm not necessarily good in projecting things. The other thing is that when we got the license when we started the company, I thought we were too late, because, everyone should understand this is the future, right? And then we got the license in 2019. I was certain that we were too late. Come on, we are not too late. It's only just starting, that's what we see.
Yeah, I like your careful thinking. How about we turn it around? I do some very careful projections and you say yes or no, or maybe. So one would be, I would expect more everyday people to start using stablecoins in general, and Monerium in particular, as it becomes just easier to understand. The technical complexity is abstracted. The user interface becomes easier to understand and more beautiful. I would also project that more businesses are likely to adopt it for international payments within Europe. I would project that there is a potential use in automated financial processes and smart contracts, and stablecoins might become a common way to send money across Europe. So I hope there was nothing in my careful projections where you say, oh my God, what are you saying?
No, I absolutely agree. The market for stablecoins is now around 170 billion US dollars. And it's I have a son in the US, and if I would send him some money over the banking system, it would take days and very expensive. Come on, I just say to him, dear son, please just download a wallet and I send you the money. That's it's going to be, as you say, it's going to be more and more. It's going to be easier and easier. The user experience is going to be better and better. So obviously, you can't compete with this. No way.
But if we dive into that, US versus Europe, so at the moment the market is clearly split much more towards the US dollar pegged stable coins, which and I think this is due to historic reasons that they've been used in the crypto exchange pairs, etc. So I think the more we see everyday usage of stable coins for payments, for example, I think that's also PayPal's take with their stable coin. So several companies are pushing in that direction. Where do you see the euro compared to US dollar, and do you see any roadblocks in there, or is it just a natural development that the euro will catch up over time? What's your point there?
Yeah, so the euro stablecoin or euro denominated stablecoin market is about 0.5% of the total market, which is nothing. And people very often say, okay, so why is that? First of all, most of the prices are in US dollars, and it is about crypto speculation. Okay. But secondly, if you think about it, then, what makes stablecoins so powerful? Well, it's just so easy to use it. You send it all over the world. I sent it to my son. Companies, they can send it between, different offices in the world without the basic cost. It doesn't cost anything. So the stablecoins they are a killer use case, but they are largely used for cross-border payments. And if you think about that, then the rest of the world, Europe is about let's say, 2 or 3% of the world or something like that in terms of population. It's small. We have 400. Yeah, we have about 5% of the world approximately. Then 95% of the world is not using the euro. Okay, let's say that. And if you are exchanging values with someone in the world, then they will prefer US dollars over euros. That's just a fact. The euro is not as strong as the US dollar. So a lot of the use cases now is driven by remittances and cross-border payments, where the US dollar is dominating. But as the mainstream market will pick up, and treasury solutions for companies and so on is going to be more, easily used, and it's going to be easier also to basically use the euro in, let's say, Brazil or in South America or whatever. Then it's more, shall we say, relevant for recipients on that end to receive the euro as well. And this will happen if the euro market would represent the mainstream market. We would be talking about, let's say that the euro market is approximately 30% of the total, 35% maybe of the total market. We're talking about 17x, just if we would basically adjust to the, change it from the current position, and if it would represent the mainstream market. And that will happen. And then in addition to that, the stablecoin market itself is going to become much, much larger. 170 billion US dollars in the stablecoin market as a total. That's nothing. Y Combinator in the US, which is basically supporting startups in the US, they said recently that, the stablecoins are changing the whole market, and the bank deposits that are held as M1 or M2, they're basically up for grab. And what are we talking about? We're talking about 17 trillion in the US. We're talking about something like, 15 trillion in the EU. So that is, the addressable market, but that will take a long time to get there. So we have 0.167 or 17 billion trillion now that are the size of the stablecoin market. But the addressable market is something like 15 trillion. So we're just starting.
Impressive numbers. But you mentioned that being a startup in Europe is a rather difficult thing when compared to the giant circles of this world. Take us a bit on this journey. So being a rather small company, what are the roadblocks there? So are you trusted easily, maybe from more institutional grade players, or is there a lot of doubt about your internal procedures, about your manpower, stuff like that? Do you see there any problems, or do you see it to be quite easy to scale even with a smaller team and being accepted in the market?
No, I think so. It's about, in the end of the day, it's about providing a credible, secure solution, and you have to be. So, what does it mean to be credible? It means that you have to have financial backing. That's obvious, and you have to also, support the ecosystem. We're focusing on Europe, and we want to do that and make sure that we are the euro stablecoin or the euro e-money token out there. Circle is company that is generating a lot of revenues because of the US dollar denominated stablecoins they have, and they have a much stronger backing. They are a US company where it's much easier basically to get VC funding. In the end of the day, I believe, however, that if you provide a valuable service, you stick to you focus on where you're good at and you expand on that, I think you have a good chance. And you talked about, are there roadblocks? Yes, there are roadblocks in Europe. VC is one. But we can also talk about things like, what happened with Mika. We got the license in 2019. And to us, it was clear that, you have to be licensed as an e-money institution in order to issue digital version of cash. The law says so. And the law also says that, well, if you don't, then you will be fined or you go to jail. Okay, so we didn't want to do that. So we got the license. Okay. But then we saw Circle, Tether, and a lot of other players basically being allowed to operate in Europe for years without any license, without the burden of being licensed. So that the problem there was that, okay, so Europe may be great in regulating these things, but obviously not in enforcing it. So that is also a problem. But then when Mika came, then in my mind, and I've actually written about it, and there is a paper, if you're interested, to share it with your listeners, is on the Social Science Research Network. It's about what MiCA actually means. And what MiCA means is that it takes a perfectly good legislation, the e-money legislation, that has been around for 20 years. It's battle-proofed. And they say, yes, you have to be an e-money institution, but then you have to do all kinds of other things. For example, you have to issue a white paper. Okay, that was a fashionable thing to do in the crypto market some years ago. But why? Come on, why would you, as an e-money issuer, if you're working on this technology, be forced to issue a white paper, not the others? I don't understand that. And then, if you're an e-money issuer on this distributed ledger technology, then we force you through law to use up to 12 banks as intermediaries. 12 banks. This is MiCA. This was not in the e-money legislation. So the way we, so the e-money legislation basically says that you can use a bank or you can keep safeguarded in segregated accounts as high-quality liquid assets. And that's what we do. We don't want to have one counterparty, like one bank. So we have, we use high-quality liquid assets where you have multiple counterparties. So the risk is much, much less than, many, many banks. But MiCA, they say, no. You have to have up to 12 banks. And you are forced, which is also new, to basically place the customer funds up to 60% in the banking system. Really? How come? What? This doesn't make any sense. So basically, in the end of the day, what you have done is that you're taking a perfectly good piece of legislation and you have weakened it. Not only because you have made it more, it's obviously favoring the banking system, which is not a good thing, but maybe it's a European policy to try to make banks bigger. But not only that, then MiCA says that, and not MiCA, it was actually a technical, it was a regulation, a part of MiCA issued by the European Banking Authority. They said in November last year. So if you use a small bank, then these are the rules. But if you use systemically important banks, then you don't have to use as many banks. Oh, really? So what does that mean? It basically means that you have created an incentive through law to use systemically important banks. What does that mean? It basically means that you're increasing the problem of too big to fail banks. It doesn't make sense? No, it doesn't make any sense. But why was it done? Well, I think it's obvious.
I'm so surprised by what you're outlining, because we're talking about roadblocks, and I expected you to say things like the resistance of traditional banks, public awareness and trust, technical challenges, economic policy concerns like central banks who are worried about losing control of monetary policy, or first and foremost, I expected you to mention a roadblock of infrastructure development, like the need for more user-friendly wallets and interfaces. But what you said is regulation. And my expectation was that the regulation, or MiCA, is actually not a roadblock anymore, because now there is regulatory certainty. So yeah, you answered exactly the opposite of what I expected.
But Michael, this is the thing. We had a perfectly good legislation, and it was absolutely clear that the law for the last 25 years has stipulated that you have to be governed, authorized, and licensed as an e-money institution if you want to issue a digital version of cash. There's no doubt about it. So it applies to e-money tokens. But this is a threat to the banking system. It is. We are competing with the banking system. We're saying, you can, get away. You don't need to be, dependent on the banks. Of course, it's a threat. we're competing with them. And you have bank lobbying in Europe, and they're obviously very, very successful. And that is back to Mario Draghi's report that came out last week. It was very interesting. I listened to his press release, and he was asked something like, so what can be done about regulation and so on? And what he said basically? He said, regulators, do less. Do less. This is not helpful, and this is really not helpful for the development in Europe. Hopefully, this will be revised, all of it. But it's really easy, and there are some suggestions being discussed. It's also the same situation is happening in the UK now. There's a new legislation coming in the UK, and they are aware of what happened with MiCA, and they don't want to make mistake. I hope, because it's really not it's not helpful. Because think about it: if you need 12 banks, then that means that you need 12 banks to say, yes, we want you as a business, as a customer. If we don't get 12 banks, what does that mean? That means that you don't fill the law and you might lose the license. What does that mean? It basically means that we are dependent on our competitors to have a license. Not only that, they decide, the banks, because now you are forced to have 60% with banks. They can decide how much of the interest rate of the underlying asset are going to be returned to the e-money insurer. Are we going to hold all of it for ourselves? So they also can basically, decide to a large extent how much profit or revenues you're going to make. Our competitors. This is an antitrust issue. And that is why I wrote this paper. And it is recently published in a legal journal. This is serious, and this is not good. And we have to face, we have to just say things as they are. This is lobbying for the banks. And we as Europeans, we have to then just say, okay, so do we want to expand the systemically important banks to make more too big to fail banks? Is that the aim here? Some people, might be of that opinion. I'm not. I saw what happened in Iceland when all the banking system collapsed, and we built Monerium basically to, give people a choice to not rely on banks, and based on a perfectly good and secure, tested legislation, which is called e-money. So, I don't want to sound too dramatic, but this is I'm not a fan of MiCA, but we have to live with it. It's the law, and what we have to do now is that we have to basically, and I've started to discuss this with policymakers. We have to change this. This is not good.
Thank you, Jón. I think we have quite some listeners from this area, so maybe we contribute a bit to your wishes. Before we go to the next topic, maybe just one more sentence about other competitors regarding stablecoins. At least they have a similar rule set like you guys. So who else apart from Circle do you see in the space?
Banks are, Société Générale, they have come out with their own company. There was a very interesting German report where a group of German banks were saying, okay, so maybe we should work together. And my immediate reaction was, oh, really? Isn't that an antitrust issue as well? But the problem with banks, so banks, they can issue, of course, stablecoins, but there are two ways for them to do it as a bank. You can issue it as a bearer instrument, or you can basically issue it as account-based. And if it's account-based, then the bank basically has to certify or agree about all, who is receiving those funds. And you might think, well, that is going to limit the use case, right? If the bank has to accept beforehand all of those addresses. But under banking regulation, then there is something which is called, I think the term is liquidity coverage ratio. So banks, they have to maintain certain liquidity coverage ratio. And it's different if it's a bearer instrument, because that is more, shall we say, liquid. And it might, the banks may lose that part of the capital more easily than if it's restricted in the banking system. So, and the German report is basically saying, well, we are, a bank consortium. We want to do this together because we are, we will do it, and we're gonna have it as a closed loop between us. Okay. Yeah, I know it's gonna serve the banks, but I'm not sure if it's gonna serve the public well. So this is it matters, what they're allowed to do, and then it comes down to policy and policymakers and politics. Honestly, that is decided by politicians, or not politicians, by policymakers, which are then basically creating all these rules, and then it's basically put in front of the parliament and so on. But it comes down to them to allow this or not to allow this.
John, since we've started talking about the competitive landscape, so yes, banks are entering the space. For example, Deutsche Bank in DWS's All Unity, an emerging project. Yes, there are existing large players like Circle, but and since we had this guest previously in our podcast, there are fully decentralized stable coins like Liquidity's LUS dollar or LUSD. We had its CEO, Michael Svoboda, on the podcast recently. So obviously, we now want to ask you, what's your take on these fully decentralized stablecoins?
Yeah, I think, fully decentralized stablecoins, this is innovation, and I think that's important. So, it comes with some risk in terms of, I guess, governance and stability. And so we've seen that in the past. I wrote something about this project that came out many, many years ago. I think it was called Stable. And it was, obviously, when I was reading that, there was no way that they could keep, the stablecoin stable as they anticipate, and they scrapped the whole project later. And then we know all about these other projects that have exploded. So, let's see. I mean, this is innovation, and I think it's important to see if there's a way to do this. I'm skeptical, but I'm ready to listen. In general, I just welcome innovation.
Okay, and what makes you skeptical is that fully decentralized stablecoins are riskier because they're not necessarily backed by real-world assets?
No, you see, if you're talking about representation of the euro or the dollar, then I'm skeptical in general, because in the end of the day, national currencies are always a legal thing, And if you are producing a national currency without backing it up, then you are basically increasing the money supply. So if it becomes very successful, then that might be a problem for the economy, really, you see? And in the end of the day, it's like, in Germany, you have these, I'm wearing a shirt, and I think it's from Boss, and it's a great quality and so on. But it's called Boss, right? And if someone else goes and makes a shirt and says, well, this is also Boss, but they don't have a license to do it, they will be prosecuted, you see? It's counterfeiting Boss shirts or whatever. Counterfeiting money is also serious. So money is always a legal thing. That's just a basic thing. If you want to experiment on new types of money, fine. It's like if you want to produce a shirt, which call it something else. Don't use a name for a bot.
That's a very pragmatic approach to this.
And then you asked about DWS. They have a different approach than I don't think it's I think it's going to be a bearer instrument. I think so. But as I understand, I don't know maybe too much about DWS, but my impression was that they wanted to be the world's leading asset manager. That was what I thought. And why would they? So how does that fit into that strategy? Is that the focus? I don't know, but there must be some rationale to this. And all the best to them.
Maybe switch to one last topic because time is running. One venue where I saw you speaking was at an OpenFi event during ECC, where this term was coined actually. And we also had Julian Grigo from Safe already here talking a bit about that. And he also mentioned Monerium. Maybe for a final short sentence, what's your role in there? I think we all already have an idea after this podcast, but what's motivating you for this OpenFi vision?
Well, I think open finance is, in some sense, just a response to what regulators have been doing. You can do things. You don't always need a regulator to tell you what to do. For example, open banking basically was forcing banks to open up and make it easier to go between banks. That didn't go too well, did it? Because you had the regulation, but then they did something. It didn't work too well. Initially, it's getting better and better, but it took a long time. Okay, and it's not great. Finance in this new world should be just like building a house out of Lego. Components. So there are different, you can specialize and try to do one Lego or one component in a really, really good way. And then make sure it's easy for others to integrate that into other solutions. That's what we want to do. So we want to offer the euro and other currencies. We are also issuing the sterling. We're starting to issue the dollar as well. We want to issue fiat on-chain for Europeans in a very super easy way, take care of the all around that, the regulation and the banking relationships and all of this. So you as a developer, you can use it as a plug and play. That's open finance. And then there are others that are providing other components. That is the whole idea. And there is no regulation, there is no enforcement. It just makes sense.
So you are just one puzzle piece in this open finance world. Every puzzle piece should be properly regulated. And then the user is more or less in charge of putting the things together, or other service providers are putting suitable services together. Is that the main idea?
Or if you have all those components, and then you're just a developer and say, well, if we put this together and this together and this together, then we have a brand new functionality, So, and then in the end of the day, the user is going to decide who's going to win, because we want to foster competition and make the best solution win.
If the user brings the time and the knowledge and the desire to go through this educational process of recombining OpenFi services or recombinable financial services, because it takes time and education.
No, Michael. Think about a wallet. So a wallet is composed of many components. And the user is just using a fantastic wallet, and what the user can receive money, that's the component from Monerium, can receive euros. They can send the same euros. They can swap between networks in the wallet. The wallet provides, they connect to, they basically get the best prices from the DEXs when you want to swap one asset for another. That's also a component. So it's basically this thinking of allowing developers to use different components to offer something super easy for the users. So the user should not have to do anything about putting this together. It's about making it easier for new platforms to take different components and build something new. If you would build Revolut today in this new world, you would take different parts and put them together. It's like an iPhone. iPhone is really a complex thing, and it's built out of numerous components where everyone is specializing in some area. Open finance is the same. You don't need to control all of it. but your part has to be perfect.
So my key takeaway today is definitely when we talked about roadblocks that you started with Mika again. So basically what you did was a plea against Mika, and I was surprised. I expected Mika to reduce roadblocks. And you made me think again. So that is definitely my key takeaway. Is it really needed in general or as it stands? And can a Mika version 2 improve that is in line with your thinking? Really good push. How about you, Stefan? What's your key takeaway today?
I found it very special to have someone who has backgrounds in so many different areas and understands engineering and economics and central bankers, and then moved away from that world again and is a bit revolutionary, but then again very grounded in what the citizens of the EU actually want and need. And I think that's a very balanced take that we listened to in the end. And I took a lot out of this. I need to sleep over it. And maybe in the next episode, Michael, I can tell you my biggest takeaway, but it was a fantastic hour with you. Thank you very much, Jón.
Vielen Dank. Sehr gut.
Thank you, John. Also from my end, probably for our listeners, where can they follow you and where can they approach you if you want so?
So it's my handle is Jón middle Helgi. It's Jon _Helgi. Or I'm on the Monerium website, and you can go on all Europeans. You can go on the Monerium website. You can sign up. You can get your Web3 bank account. Is it okay to have an advertisement in the end?
the way you did it, it's okay. All right. So thanks for making it to the end of that super interesting episode. Discuss all the contents with us on LinkedIn, Twitter, in our Telegram group, and on YouTube. And there you can share, like, subscribe, and comment. And of course, we do have a website too called bfrr.de. So not only go to Monerium, but also to bitcoinfiatandrockandroll.de. And thanks for making it through the episode, for listening in, and do provide feedback on English language episodes and on John's take against Mika.
Thank you very much. Bye-bye.
Thank you.
Achtung, Disclaimer. Die Inhalte spiegeln die private Meinung der Hosts wider, dienen ausschließlich der allgemeinen Information und stellen keine Anlageberatung oder Kaufempfehlung dar. Es gilt: do your own research, informiert euch, bevor ihr Investments tätigt. Das alles findet ihr auch auf unserer Website unter www.bfrr.de/disclaimer.